Good morning, everyone. Welcome to Stock Market Today. Today is Tuesday, July 2nd, 2019. This is Nick Webb coming to you because Dan Russo is still on his honeymoon, although that will shortly be coming to an end. If you look down there, you can see his Twitter handle. If you look at his Twitter feed, you can be regaled with all the pictures of Italy, where he is clearly enjoying himself and having some wonderful meals. There's probably about 10 pictures of some of his restaurant activities. And I gotta say, I feel heavier just from having looked at those pictures. So let's move on to the market. The S&P made an all-time high yesterday, and it did it during the intraday. It did not end at an all-time high. Oh, it did, actually, I think. Chip stocks had a banner day. This is all due to the trade detente from China. The market, it does continue to sort of live in that narrow channel, although it's breaking out to the upside. But there is still resistance at that 2950. It's got a pull on the S&P right now. And so it's still in that channel. I looked at the S&P in Chaikin Analytics. Believe it or not, it's looking oversold right now, so there is more potential there. So hopefully there's more catalysts coming up and we can see where this takes us. If you look to the right-hand side, all the major indices had good days, with the exception of bonds. The large caps outperformed the small caps. NASDAQ, which is very tech-centric, had a great day. So all in all, very, very positive day. You can see the tech stocks were up almost 1.5 points or over 1.5 points. The stocks got out of the gate strongly. So it started out right from right at the starting line. But throughout the day, they gave some of the gains back. Then at the tail end of the market, there was another little bit of a push, and that's what drove the market higher right at the end of the day. Just a couple comments flying underneath the radar because of the China trade situation. One of the things that's not being talked about enough and its impact is that OPEC's going to extend their supply cuts for the remainder of the year. That's big. The fact that they, first of all, made it through this far without any major cheating. They've been very disciplined at staying within their supply quotas. And the fact that they can rally disparate parties from Venezuela to Iran to Russia to Saudi Arabia and all agree on supply cuts, that's very interesting. Of course, the US is not a part of OPEC and is feeling no way constrained by those supply cuts. So they will continue to produce freely. And that supply will continue to drive inventory build if it continues at the speed it is, unless there's a resurgence in GDP growth. Basically, GDP globally is pretty much flat, and that's reduced the demand for oil. So even though OPEC is being very disciplined, it's not driving the prices down as much or driving them up as much as they would like. Corporate guidance for Q2 and Q3 continues to be dismal. And the earnings season is starting soon next week. So something to keep an eye on. I'll actually have a slide that talks to that later in the show. Technology and finance sectors shine yesterday while the utilities and real estate continue to lag. That's been the picture for this sort of like mini rise here over the last 2 or 3 days. Technology and finance have definitely been leading the pack, and utilities and real estate have definitely been at the bottom of the pack. Will the roll continue for a third straight day? Well, the futures market right now is saying no, and is pointing to a slightly lower open. So you take a look at the sector movement over the last 5 days, you can see financials are doing great. That's partly as a result of the trade deal, but it's also partly a result of the Federal Reserve giving them a clean report card for the major banks. That's a big deal. It gives them a lot more flexibility in how they manage their capital, and every single one of them passed with flying colors. That's they have done a major capital build since the last market meltdown, where a number of large banks went out of business. So this actually says that they can withstand a pretty significant economic recession and still be relatively solid with their capital. You can see real estate and utilities really sort of bottom of the pack. They've been there for a while, you know, it's not an area to focus on these days. Our industry focus is healthcare, and you can see it's sort of a middle of the pack performer, 11 out of 21, with a Chaikin power bar that shows 17 bullish or very bullish stocks relative to 12 bearish or very bearish stocks. Probably you can see that there are 38 stocks that are living in the middle, that neutral area. So again, this is a pretty sort of mediocre, average, run-of-the-mill industry right now. There's three sort of top stocks from this industry. I'll take a look at one of them. I'll take a look at OraSure. You can see that this is a stock that, you know, I found it fascinating when I pulled this one up. It was not one that I was familiar with. You can see we rate it very bullish. But what's interesting is look at this long-term trend. It's just been straight down, going from $18 a share down to, you know, almost $8 a share. But all of a sudden, you see at the very tail end, it's beginning to rebound. You can see we haven't rated it as bullish except for right here starting in July. So we caught the start of that resurgence. And you can see relative strength is still very poor. Obviously, when you look at this chart, you can see that relative strength is going to be weak. But again, with the little rebound, it's beginning to move in the right direction. The interesting, very interesting note here is look at the build in Chaikin money flow. All of a sudden, institutions have caught this stock and are really beginning to buy into it. So this is a real interesting stock. Another interesting stock, J2 Global. This is a randomly picked out stock, so don't use this as a stock recommendation. This is just illustrative of what's out there. This is in the computer software services. I think we probably talked about this a little while back, how strong that industry is. So it's a great industry. And if you take a look at the power gauge rating, very bullish, and all of the components are almost at the far right. So financials, earnings, technicals, the only fly in the ointment, and it's a minor fly, let's call it a mayfly, is the experts aren't very bullish. They're just straight bullish. So great looking stock from the fundamentals. So Chaikin Analytics likes it. You come down to relative strength, and you can see that the market likes it too. It's had good relative strength since February. And you can see the institutions are liking it too, with a nice build of money supply, so, or Chaikin money flow. So this is a strong stock and an interesting one to take a look at. So, and you can see it's sort of like in the middle between overbought and oversold. So timing wise, you may want to wait a little bit, but this is a decent stock. So what happened yesterday in the market? Who were the winners? Who were the losers? Well, most of them were technology chip makers that were positively impacted from the weekend China trade. So for example, Skyworks, you know, heavy duty technology and chip manufacturer, up 6%. I mean, that was quite a move. Corvo, again, telecom sort of infrastructure, they've done well. The only one that's not a technology / chip manufacturer was Wynn Resorts. So how did Wynn Resorts get up there? Well, Macau just came out with a report that gambling has been resurgent in Macau. and that's a big area for wind. So they rallied on that news. On the flip side, Coty, they're a soap and perfume manufacturer. They have not been doing well. They finally announced their turnaround plan, and Wall Street analysts panned it, and all of a sudden you've got shareholders that are filing suit to them. So obviously not a terrific stock. Macerich, not much to say about this one. It's just a straight dog. Royal Caribbean also down 2.5 points. The news behind that is there's still a lot of concern with the Cuba travel ban, which is an important destination for them. So, you know, they have been bearing the brunt of that. Finally, Boeing, you know, what can you say? There's more delays on the 737 MAX, and that is just not a good looking stock right now. So there were no earnings surprises on Monday, no earnings reports, so we'll move on from that. Only one reporting today before the open. So again, very light reporting day. This is what's known as the calm before the storm. Earnings season does kick off next week, so it'll get a lot more interesting when that happens. Just as a preview to earnings season, let's take a look at what's, you know, this is coming from FactSet, their earnings insight report, and they do a fabulous job sort of laying it out pretty much on a weekly basis. This dark blue line is the 12-month forward EPS estimates. So you can see there's not a lot of growth. As a matter of fact, there was actually shrinkage in the 12-month forward EPS, you know, earlier this year, but you can see it's basically flat, which is not a recipe to really support the market. If your earnings estimates going out 12 months are flat, hard to justify prices going up as much as they have. And yet here we are. Take a look at the price movement over the last year. So this is something that you'll have to factor in. Earnings are not providing a foundation for this market and don't appear to be for quite some time. But what is there's great breadth in the market. You can see this is a chart of the percent of stocks that are above their 50-day moving average. It's not surprising that when the market is doing well, this percent goes up, but look at how high it is. So 3 out of 4 are above their 50-day moving average. And my guess is if the rally extended, then even more would be over that moving average. So this is a market that's showing great breadth. The breadth continues to grow. So everybody is contributing to the rise in the S&P 500. That's a great story. Gold has been fascinating over the last week. The prices have gone through the roof last week, and then they've started to come back to earth. They're giving back some of their gains. The more uncertainty there is in the market, the more that gold goes up. And so this trade detente obviously had a negative impact on gold. But again, if you think about it, there's a lot of room for missteps in China trade negotiations over the next 6 months. So we're not out of the woods here with China, and gold could still, you know, gold is hanging out there near its highs. So keep an eye on that. So just want to provide a little pitch for getting and signing up for a Chaikin Analytics Power Feed. We do produce this on a daily basis. It comes out before the market opens. Just go to chaikinanalytics.com/today, and that will provide you with a every morning newsletter. And then there's actually a weekend edition where we sort of do a recap and talk about, and usually there's some blog articles involved as well. So it's a great thing to sign up for and highly recommend it. The other thing is if you like the show, share it. Really that's it. So it's been a pleasure. I'll be back tomorrow morning, and I will also be doing Friday's show and then Dan Russo will return next week